Hey everybody, welcome back to another video. Tonight we're going to be going over probably what I feel is the most important tool that we have in our chest of knowledge, and that is the bond yield curve. We're going to go over the three different types of yield curves and exactly what they're trying to signal us as investors moving forward into the future. So let's not waste any time. Let's get right into it. The first yield curve that I wanted to discuss was the steepening yield curve. Now, what the steepening yield curve means is that dollars that are further out into the future, they're a lot less desirable to hold because there's going to be a very high amount of economic growth further into the future, and a lot of people don't want to be holding bonds in that environment because they want to be able to participate in other higher growth assets such as technology, commodities, energy, and the list goes on from there. Cryptocurrency even now. So that's definitely something that you want to avoid holding in that environment is a long-dated U.S. Treasury or even sovereign entity bond. The second type of yield curve that we commonly see is a flattening yield curve. And usually what happens when the spread between the 2-year US Treasury and the 10-year US Treasury start to kind of move in a direction like this and kind of flatten out, what that's effectively saying to us as investors is that things are going to be very rocky, very dicey, very uncertain. And, again, as you know, in that particular environment, there's going to be other assets that we're going to want to hold, such as cash, long-dated U.S. Treasury bonds, and even gold. Right now, we can see with the current flattening of the yield curve that we have going on, obviously things like oil, things like gold, even the 10-year U.S. notes, the yields on those are starting to drop, which means the price is going up. So we want to pay attention to these kinds of things because the yield curve is something that's like a precursor, I guess you could say, to what's going to happen in the future. So what we can do is we can use this tool to our advantage to ensure that we're going to be owning the assets that are going to be in the most favorable environment as to what the bond yield curve is telling us. So now the third type of curve that we can see is an inverted yield curve, where the long dated US bonds, the yields on those drop below the shorter dated US bonds, and then it's exactly how it sounds. It inverts. Okay, so that has been the precursor or has led to a recession something like 96% of the time. It's literally predicted every single recession over the last 40 to 50 years, with the exception of one of them, I believe. So it's definitely something to keep a really close eye on. And the more that we see that yield curve flatten out, the higher the probability is that we end up moving towards a recession. So it's important for you, the viewer at home, to kind of recognize this, keep tabs on it, and make sure that you're paying attention, because you don't want to be caught with your pants down and wonder why, hey, how come my portfolio is down all of a sudden, 20%, when you could have avoided that. You could have repositioned your, maybe some of your equities into some more safe haven kind of assets like gold, even cash, bonds. It's a really tricky environment to be investing in right now, just with all the, chaos and uncertainty going on. So it's really critical that instead of focusing on, what XYZ stock that we're going to buy, really hammering down here and focusing on the portfolio construction of our, what our portfolios are made of. If you're somebody who's 100% invested in cryptocurrency, I mean, like, hey, knock your socks off with that. If you're, somebody who's 100% invested in stocks or bonds or whatever, that's been working really well the last little while. And, we all look like geniuses right now, but this is really crunch time where we figure out who the winners are and who the losers are. So I don't really want to see anybody get caught with their pants down here and, get completely wiped out because they overinvested on margin and stuff like that. It's a really perfect opportunity to really dig into and focus on your education as an investor, so that not only when you have good times like we just had over the last year in 2021, that we actually are able to book some of those gains, take some profit, and reposition our portfolios so that when the chaos hits and the shit hits the fan, that, hey, again, we're still able to make money in that environment as well. So be sure to subscribe and like the video for more content like this and to get this out to more people. So like I said, there's certain assets that we want to be holding in environments like this when the yield curve is flattening. Obviously, there's going to be a lot of turmoil, a lot of volatility, probably a lot of price action moving up and down in the stock market, especially in the higher beta tech stocks. So what we want to do is we just want to understand the assets that usually perform really well in kind of environments like this where there's a tremendous amount of uncertainty. Obviously, gold is a safe haven. Bitcoin is still kind of to be determined on this one, although I do really like Bitcoin. I think this is a perfect opportunity, and I'd like to see that particular asset really decouple from the stock market and the bond market and really just solidify itself as a safe haven asset. We've seen a pretty big bump in the last day or so, couple days on Bitcoin, as well as gold and as well as long dated treasury bonds, like I did mention as well. Probably a good idea to have some cash as well, specifically US dollars. If you guys haven't seen a fella by the name of Brent Johnson talk about the US dollar milkshake theory, definitely give that a search on YouTube as well. And just again, really what we're trying to do here is just empower you with more knowledge so that you can make better decisions. What you do with that knowledge is up to you, and none of this is to be taken as financial advice, just merely as financial education and financial opinion. So hopefully you guys are being prudent, you're being smart, and you're not going 100x leverage right now on your favorite XYZ stock or crypto coin or whatever it is. Now is the time to definitely be prudent, to be smart, be strategic. And if you want to follow us for more content on how to be able to do that and unplug from some of the lies and the bullshit that we get taught as kids about money and, into our adult lives and stuff like that, of just buy a diversified portfolio of stocks, bonds, mutual funds, and just hold it forever. This is definitely going to be the channel for you. So be sure to like the video to get this out to more people, and hit the subscribe button and the bell so that you can be notified of when we come out with new content. Have a good evening and take care.